Hey guys, happy Tuesday. It's Jay Green with GW Private Capital, Repair to Sell and Real Estate Rehab Investments, located here in Whittier. Just want to touch base and give you guys an update with regards to the Southern California and California housing market. You know, we're in a really super interesting real estate market right now. I'm going to call it fickle because when I get clear indications that property values are dropping and plummeting quickly, then I get new data from realtors and looking on the MLS, and also data reported by some of the data analytics companies that track this data. And it's so strange. Like, I'm selling one of my flips right now, and I thought for sure it would sell a lot cheaper, and I'm selling it much higher than what I had projected. So I think the California housing market is going to be its activity, price drops, price adjustments. You're seeing price adjustments right now, but it's definitely going to be based on kind of location to location and inventory. Recently, I think one of the things that made the housing market a little fickle and gave me a little pause is we just had a slight mortgage interest rate reduction, and I think that kind of caught the attention of a few buyers and re-engaged a few buyers that thought rates were continuing to go up, which they are going to continue going up. The Federal Reserve keeps raising the federal discount rate, which they just recently did. So if you're buying a house, this is some of the advice I would give to buyers, not necessarily flippers. Well, that's going to be different advice, but I'm going to say if you're buying right now, I think property values are going to continue to drop as the year goes on, especially as we get into next year, as mortgage interest rates continue to go up. Now, if you're a buyer and you want to buy, I wouldn't say it's a bad time to buy a house because of mortgage interest rates you're going to get a lower rate right now. You have to buy the house anticipating that if you buy the property, that the property value is most likely going to come down. However, if you can lock in a rate, I think it would be better to buy your house now at a lower interest rate, even knowing that your price value might drop. Because if you're buying it for the long run, you're buying the house, you're gonna live there, you're getting the benefits of home ownership, tax write-offs, having a home rather than paying rent, tax benefits, then buy the house. I don't work with a lot of buyers. I'm not trying to say this because I'm representing buyers, but I'm only saying that if you're a buyer and you find the house you really, really like, go ahead and buy it because the interest rates are going to continue to go up. So at least right now you're going to have a payment that's locked in, unless we see like a huge drop where now you're getting like a tremendous discount in price. But what's going to happen if you wait, then you're just going to have a significantly higher interest rate and payment. So it's going to kind of giving up one, evil for another. So I'd say right now, if you can afford the payment, go with the lower rate before rates continue to go up, or just sit it out and see what happens when property values continue to come down. I'm very careful. I'm a flipper. So for me, my anticipating what a property is going to sell for is critical, because I'm buying a property knowing that I'm going to be selling that property within the next 2, 3, 4, 5, 6 months, sometimes a little longer if my project runs longer and I'm doing more extensive remodeling. It go as long as 10 months or a year. As a flipper, I'm being very, very cautious right now because I believe property values are going to continue to soften in California, and I think you're going to see more inventory as the economy gets worsens and inflation continues. I think that's going to have an impact on employers and employees. There's a lot of people that are just being impacted by high cost of living and many things right now. So If you're a flipper, I would definitely caution you to be very, very careful. I'm down to 2 flips right now. One's an escrow to sell. One is here in Whittier that I bought for $640, and I'm doing an extensive remodel, and I'm hoping to do very well on that. I think even if that property value drops, I'm hoping to hit over $1 million on that property. And if I fall short of that because rates continue to go up, we see more inventory, I think I'm gonna be okay. I'm not gonna get hurt on that one, but I'm looking at another one in Anaheim, buying it at $650. What's interesting, I looked at this property a month ago. There were no comps over 800,000. Now there are 3 comps over 800, even one almost 850. So this is why I talk about a fickle market. It's like, before I was a little, hesitant on buying it at $650. I got a call over the weekend from the seller that another buyer wouldn't cancel with them. So they called me over the weekend, a month later, from me initially speaking with them, that now the buyer's canceling because he can't raise the money. He asked for a price adjustment. So I may buy it at $650 because I see 2 clear comps at $830 and one at almost $850, like similar square footage, same neighborhoods, and I'll make my house like incredibly beautiful. So I know property values are going to continue to soften, but again, it's a fickle market in that, we're seeing some areas, some of the prices are holding, other areas are, plummeting quite a bit. So I think it definitely depends on the area, the location, what part of California you're in. Look at the data, look at the comps, look at days on the market, look what's available to you. And if you're a buyer, you consider still selling, or buying rather, because interest rates are lower than I believe they're going to be as the year goes on and in the next year. If you're a flipper, an investor, be very careful unless you can afford to sit on the property and rent it out if you can't sell it right away. So make sure you have, a couple different exit plans for your project if you're buying a flip. I went and looked at another one today in Yorba Linda that I could get it for like $950. And as a flip, it doesn't really make sense because there's 2 comps, one at $1.1 million, one at $1.2 million. That's way too tight as a flip. But you can turn it into 3 units and rent out the house, the junior ADU, the ADU, and command about $8,000 in gross rents. It's not bad gross monthly rents for a 9 purchase. Not great, but not bad. You can almost make it pencil. So anyways, I just want to caution you guys, just kind of giving you my opinion of what's going on in the Southern California market based on my own experiences right now. So I'm going to continue to just throw out some videos as I talk to a lot of realtors about what's going on in the market, as I see inventory increasing, if I see immediately price reductions. Wish you luck if you're buying or you're selling real estate. And thanks for, again, watching my video, and I'll see you in the next video. Thanks.